We've got mortgage rates, Bob, through 6%, maybe approaching 7%. Had a massive repricing of real rates. How long before this shows up in the economic data, Bob, economic activity?
Well, I think that's what the Fed is looking for. They do see that they're raising the cost of funding, so it's impacting auto sales, housing, and credit card purchases, but it's coming down from a very high level. And as Victoria said, corporate profit margins are still pretty good. And they put in place 2 years of ultra low cost financing in 2020 and 2021. And you've got a tight labor market. So they've got to pass along that cost. I think the Fed's watching all of this, and I think it's going to cause them to have to go further than even we think in hiking rates to really lean in to this kind of growth.
Is that a 5 handle on Fed funds, Bob?
Well, for now, we're at 4 3/4 is a minimum. So yeah, 5's definitely in the realm of possibility. And one of the things that we've looked at is the Fed has never stopped a hiking cycle with both headline and core inflation above the Fed funds rate. So they've always gotten to a positive real rate.
So Bob, with that in mind, you've got the potential for 5% Fed funds. You've got a base case of a recession. Can you talk to me about the character of that recession? I get a lot of guests on this program, Bob, you've heard them, who talk up short and shallow. If we get one, it will be short, it will be shallow. Do you share that?
No, I don't. I think that you have to step back and say the Fed is fighting a 40-year inflation problem. And they and the other central banks are horribly offside. So they're going to be very aggressive in here. On top of that, we've had 2 years of ultra excessive liquidity at a very low funding rate. So when you have tremendous liquidity, which is costless, it bubbles up and gets leveraged somewhere. And as you raise the cost of funding, certainly as the Fed is doing to that magnitude, something will go pop in the night. We're keeping our eyes out, trying to figure out where that is. But for sure, something's been financed with too much liquidity at too low a cost, and that will pop.